if things change and we get into a bull market where DeFi yields far eclipse traditional finance yields like we had a couple of years ago, that's a different story. Then I could see a product like this or a project like this getting a significant amount of deposits then. Hello, everyone, and welcome back to another episode of WagMe TV. Today we have an exciting one for you guys. Today we're going to be doing a project spotlight, first one that we've done in a while, and today we're going to be talking about Arch Finance. Really interesting protocol. They're launching a lot of diversified strategies, yield strategies, things of that. We're going to take you through everything you need to know about Arch Finance, and Ev, let's kick it off.
Yeah, I feel like on this podcast, we're not necessarily meme boys going after meme coins. We kind of like to look through projects, do deep dives, and have like a pretty structured approach to how we invest. And I think Arch has that same approach. They really go about being able to create smart, well thought through, well strategized baskets of Web3 products to be able to invest in. And really, what they like to say is they like to compare the Web3 boom to the 2000s .com bubble, where it's like if you had stock or ownership in a couple of these small .com companies, you might have lost it all. But if you were well diversified across the industry, you would have been able to hold on and actually profit very well through that time. And so, that's what they're hoping to accomplish with their products. And really, Arch has 7 products across 3 different types of products. Let me go ahead. 3 different categories. And what these categories are is they're risk adjusted, which is essentially baskets where they go through and kind of pick what types of projects and products they want to throw in there. When you look at the prudent portfolio, they may have more Web3 projects in there, which could have higher upside, maybe lower downside or more downside. And then they also have index style. With this, you're looking at top cryptocurrencies, which holds Bitcoin, Ethereum, Solana, Polygon. So you're really getting a basket of different L1s and Ethereum killers along with Ethereum in there. And then as you go down to yield bearing, you have tokens or baskets that earn interest on Ethereum and then also in the US dollar. And so they do a good job of also visualizing the type of risk that you're going to take with investing in these different products. And I think, like any other cryptocurrency that we've talked about on this channel over the last couple of years, it's probably had a tough, price performance in the last few years, especially, the beginning of 2022. So, when we look at top cryptocurrencies, we're going to see, a chart that reflects the type of downturn that Bitcoin and Solana and all these projects have taken. And so I think what we want to talk about today is more the safer yield bearing products that they have between Ethereum and then also the digital US dollar products. And so, I think this is probably your area of expertise, but maybe we can talk through the way that they back these tokens and then also the performance that these tokens have had over the last few months and year.
Yeah, definitely. So, the yield generation kind of diversified product is something that's gaining a lot of traction. I think there's a variety of different protocols in the world of DeFi that are, kind of going after this similar thesis. And so it's interesting to see the way these guys have approached it and take a look at what their strategy actually entails. So on one side, you have the Ethereum basket, right? And so I can go ahead and pull that up here. Oh, okay, you got it up. So the Ethereum basket is when you look at fundamentally what they're doing with this interest bearing kind of portfolio is they're really focused on a couple of different things. One, they're focused on liquid staking. So we're all familiar with the liquid staking trend that is taken place with the transition to proof of stake on Ethereum. And now you can stake your Ethereum to secure the network, and process transactions and do everything like that on Ethereum, and you get you earn interest on it. There's a variety of different projects, the most popular being Lido. There's also Rocket Pool, as you can see this basket. They have both of those in there, along with let me see what else is in here. Staked Frax ETH, so another project Frax that has their own liquid staking product, and so you kind of diversified basket allocating across these three different products. So you're not necessarily just solely exposed to one project essentially. On top of that, you also have, it also utilizes Yearn vaults. Now, Yearn is an interesting, kind of yield aggregation. You can almost look at it as like a decentralized hedge fund in a way. They have a few different, really interesting features, particularly for the retail customer. One, they have auto compounding. So usually, if you're farming a liquidity pool or a lending position or anything like that, in order to get the APY, you actually need to be, reinvesting your rewards and compounding it yourself. Yearn is really interesting in that it enables you to. They actually have an auto compounding feature built in. So you, as a retail customer, you don't have to spend gas fees, anything like that, to actually auto compound your rewards. It's just doing that automatically for you in the background. Um, the other thing about Yearn is that it's a very tried and tested protocol, right? It's, when it comes to DeFi, you're looking for safety. Evan mentioned one of the good things about Arch is it gives you kind of a risk metrics and a risk framework to think about these different products. And what you like to see here is that, Yearn is as tried and tested as you can really get in the world of DeFi. It's one of the OG projects, and it's stood the test of time, which is obviously great to see. So that's kind of what they have in the Ethereum basket. I think it's a really interesting product. I think it could benefit from being even more diversified, right? Now we're getting to a point where we're seeing a lot of different LSD type projects come out, right? Not just Lido, not just Rocket, not just these top ones. Would like to see a few more of those because when you look at an index, like imagine if we took the S&P 500 index and like made it only like 5, right? S&P 5 is not that interesting. S&P 500 is a lot more interesting, a lot more diversified, offers a lot more convenience for your average customer. So would definitely like to see that kind of get more diversified over time. Um,
Yeah,
in terms of,
it's an
yeah.
interesting point. Just wanted to add to that because when you
Mhm,
look at a lot of these baskets, whether you're looking at the cryptocurrency like L1 basket, you're seeing, close to 52% Bitcoin domination in there. You're
mhm,
like you said, the Lido LSD is 65%. That is an interesting point when you look at some of these baskets. Is maybe they're a little too heavy when it
mhm,
comes to certain tokens. Where when you look at the USD diversified yield token, there's a lot of DAI in there and 35% USDC. So that's a good point that you should consider before diving into these products. Are you know how how diversified do you want to be, and what's their future roadmap for adding more tokens into these baskets? But yeah, go ahead.
yep. Yeah, no, it's a good point for sure. I'm curious actually. Now I'm looking through the what's interesting about Yearn, right? I mean, this is a good time to kind of transition into the stablecoin product. Basically, it's the same concept, right? You deposit stablecoins with them. They're going and deploying it into various strategies in DeFi, and you're earning kind of a blended return on that yield. What's interesting with their allocation here is, first of all, it's all within Yearn. So to the point of diversification, here you're actually exposed to entirely Yearn smart contract risk. So that's something to take into account, right? Um, I think these Yearn vaults are actually going out and redepositing into other strategies. So within this, as I mentioned, it's kind of like a decentralized hedge fund where your capital, if it's just in a vault, maybe is in multiple different strategies. I don't know exactly what each of these Yearn vaults consists of for these stable coins, but it's possible that it's doing that. So it's diversified in that sense. But on top of that, of course, you have your layer of smart contract risk that's Yearn specific here. Ideally, I would like to see this diversified across different projects as well, not just concentrated on urine. Um, Generally speaking, though, this basket seems to be. I wonder if we can see the performance over time here. Um, but you're
Yeah,
right;
this
it
is
is
what they
definitely
have in the fact sheet.
heavily weighted towards dye.
Yeah, yep. And I think, maybe that was a case of, the SVB stuff that went down with the USDC, if, maybe it was more 1 to 1, or, if but I will say, man, it is interesting that, Tether is only at 15% with
Hmm.
USDC at 35%. And I don't remember the timing, but would this be the drop for SVB in this March
Yeah, it
range
definitely
right here?
was. That's
Okay.
exactly what it was. It's the USDC DPEG right there.
Yeah, yeah. And I think it's interesting, that's going from $10 to $9.30. And this is something
Hmm.
we talked about on the reserve episode, was that, by diversifying, you limit the amount of downside that you're subject to when, failures like SVB happens, because, really this went down to, I think, 85 cents at one point. And so you're
Yep.
really taking half the downside on that.
Yeah,
But
absolutely. I
yeah.
mean, diversifying across, less centralized stable coins would also be kind of an interesting thing, like something like LUSD or something that's much more, decentralized
Yeah.
in its backing, backed by Ethereum, something like that could be cool. I'm looking through the urine strategies right now. It actually, we can link it. It's kind of complicated to go through on this, but we'll link, the underlying urine strategies in the descriptions. You guys can take a look. But they're pretty detailed in terms of what they're doing with those underlying stable coins within Yearn. The yields, shockingly, aren't that great, especially when you look at broader DeFi right now. Generally the trend is DeFi is losing TVL because, of course, government bonds, money market funds, things of that nature are providing really solid yields right now. Um, and so it's not really surprising to see that these guys haven't accumulated that much TVL at the moment. If their stablecoin fund is looking like it's yielding about 2 to 3%, meanwhile, you don't have to take that risk, and you can go in your money market fund and get 5%.
Yeah.
It's hard to see why anybody would actually allocate. Now, if things change and we get into a bull market where DeFi yields far eclipse traditional finance yields like we had a couple of years ago, that's a different story. Then I could see a product like this or a project like this getting a significant amount of deposits then.
Yeah. Yep. Absolutely.
And that should do it for this week's episode on Arch Finance. We hope you guys enjoyed. If you found this useful at all, make sure to like, comment, subscribe down below. We'd love to hear your guys' thoughts on Arch, and we'll see you next time here on WagMe TV.